it comes back to the business value. So, how are your members or banking customers today with your services? What are the gaps? What are you working to fill? And then what are the roadblocks? And it's in those roadblocks that legacy applications, integrations, complexity are going to come in. So then what's the strategy to deal with that? And oh, by the way, insurance yourself on open banking.
Competitive and regulatory pressure around open banking has been seen as both an opportunity and a burden, if not a direct threat, to community FIs. Most pressing is the still in development Consumer Financial Protection Bureau data portability regulation. These rules mandate institutions provide consumers API access to their financial data, including transactional history. With us today to discuss these pressures and how to frame them for your strategy is Lisa Arthur. Lisa is the U.S. Director and Global Chief Marketing Officer for Sensedia, a provider of API management and open banking solutions. Our discussion gets into understanding the issue, how it impacts community institutions today, and the practical ways you can take advantage of the situation to accentuate the personalized and trust-based services you are known for. Lisa, thanks for being with us today.
It's a pleasure. Thanks for having me, Rich.
So Lisa, before we get into the specifics about open banking, you have a pretty diverse background coming to this from both a marketing and a technology standpoint. Will you tell us just a little bit about that, and what kind of eventually brought you to your current position, and that perspective from where you're coming from?
Yeah, thanks. It's really interesting. I started working in financial software back in the 80s. And for some of your listeners, I think they might not even have been around then. But I was originally the head of marketing for a company that's now part of another company that sold accounting, manufacturing, and distribution software. And I really got into the space of finance. It was way more exciting than I expected. That little entree led me to all kinds of different domains and industries across my career. Oracle, I worked very closely with financial institutions as the head of CRM marketing, helping them better personalize. At Akamai, building amazing online experiences for customers, and then into running my own company. After working at Teradata and Teradata Analytics, I worked with some of our customers there, like Wells Fargo, really looking at, how to leverage big data in a non-creepy way to add value to customers. And I guess that's always been the mantra of adding value to customers, which is why I'm now here at Sensedia. So after running my own business of strategic advisory, marketing, technology, all focused on technology over the past 30 some years, Sensedia is very focused on enabling a more digital, connected, and open world. And to me, that adds value to customers. And so I'm leading our US operation as well as serve as our global chief marketing officer.
So I think one of the things that, is kind of the Venn diagram of our audience interests and kind of where you're coming from is certainly the idea of data and how data gets used, and the emerging areas around data portability, which begins to show up in the kind of Big Ten idea of open banking, and then specifically some of the things that we're beginning to see from both competitive pressure and regulatory pressure about what financial institutions are expected to do with their data. So just tell us a little bit, maybe like the really short version of what is your opinion of that space, and or how are you approaching it as a market?
So if you think about if it's a credit union, their members, or a smaller bank, their customers have long wanted it to be easier to do things like move money from other accounts and banks. And that is kind of the spirit of open banking. It's about open sharing and data with ultimately the member or the banking customer owning that data. It's really quite simple. What's not simple is how to get there. And that's what, we get excited about at Sensedia is helping organizations that may be competing against some of these financial juggernauts, that have a lot more resources and money that currently are using screen scraping to make it easier for their consumers or their members, because that was the easiest way to deal with legacy obstacles. And finally, realizing that this is an opportunity to be more banking customer member centric, adding products and services that really add to the experience but grow the revenue. And so um, it's not simple to get there, but it's quite simple in the fact that it's an ecosystem of having the customer own their data and having the bank or the credit union own the APIs and the experience that make that easy, secure, and a growth leader.
So for a lot of community financial institutions, and certainly ones that we've talked to on the show, this is not a comfortable topic to get into,
Yeah.
and a lot of that comes from since forever, and that's probably going back to the 60s and 70s. They've primarily had almost nothing to do with technology. That it's been a reliance on the core banking providers, of which three make up 75% of the market out there. It's not a lot to pick from, and particularly in the 2000s and kind of up through the tail end of the recovery, they were very slow in responding to needs and capabilities. Very rudimentary capabilities like remote check capture, let alone any kind of interoperability, right, was like this cutting edge thing that they were still looking to do, largely because customers were pulling it out of them, right? It was this,
Mm-hmm.
obviously mobile played a big part of it, but it was, let me do more with my money, with my data that I have. Things like, obviously Quicken has been around for a long time, but the Mint is a competitor that came in that
Yeah.
Intuit eventually bought. That whole idea of let me use money more effectively. It was the pull aspect, and
Mm-hmm.
the beginning of that was beginning to see emerging financial technology, and particularly fintechs, more as a direct competitor, as a threat.
Mm-hmm.
Um, the biggest one that they will talk about, obviously, is around payments. Some
Mm-hmm.
of the things that came out of Dodd-Frank that kind of opened the door for Venmo, for Cash App, and some of the other competitors, right? Uh, that began to like eat into their capability, and those companies are now primarily competing with them as a primary financial institution. So it's only fairly recently, and I could probably say 5 years and put some numbers on that, where many of these institutions look at fintechs and financial technologies as potential partners, not just,
Yes.
hey, I want to give you a feature, but also I want to steal, the relationship with your customer, and also probably eventually the deposits, which is your lifeblood, right? So there's a little bit of trauma there, from an industrial standpoint of how do we deal with this topic in general, and then also looking at partners to come in and do this for us or help us with this. So on that one, I do want to get into 1033 and that aspect of it, but just on that part of it, how do you talk to customers of this size, right, where they're not primarily a technology driven company or a technology driven institution?
Mm-hmm.
They're probably a pretty good consumer of one, but not one that's really driving a technology agenda.
Well, and I think you're absolutely right. And as we look at open banking, it has definitely technology needs to it. However, in the customers we've worked with in credit union and banks, what they've done is tore the silos down between the technology and the business aspects, because by doing that, you can look at it as one, it's not just compliance, and two, the promise of an ecosystem puts the bank, puts the credit union, even if they're smaller, at the center of the universe. So technology shouldn't just be for the big people, the big guys. It it and I believe that open banking is a risk for these smaller organizations if they wait. In the CFPB world, the and this was at the draft, right? They have not published yet, but at the draft of the original regulation, banks that had 850 million to 50 billion had 2.5 years to comply with data sharing. Under 150 million, it's 4 years. Now, why do I bring that stat up? Well, if you're a bank and you think you have 4 years, you can just kind of coast. And this is what we're hearing from a lot of the senior executives I'm talking to. We'll wait for CFPB, we'll then get a strategy, and it's a compliance play. I would challenge, if you're a smaller bank and or a credit union, and a credit union, you might be working with a CUSO, and we might want to come back to the CUSOs because that can be a potential good partnership with smaller credit unions. I also know some CUSOs are supporting some regional banks. But if you've got these massive organizations driving better digital experiences, taking ownership of that payment initiation, putting together ecosystems, and your digital experience isn't evolving, changing, you risk losing your banking customers more than ever. So we advocate, and we've worked with many customers to actually say, we're going to drive open banking, not just compliance, but for value, for the member, for the banking customer. And what does that mean? Well, and you talked about it in the technology piece. It's taking a platform or an ecosystem strategy instead of fighting these fintechs or trying to do it one off, because that's not very scalable either. So, what does that mean? Because it sounds expensive. Well, we work to provide enterprise financial grade connectivity for smaller institutions because they need it as much or more than the bigger folks. And when I say bigger folks, I'm talking about the big financial brands. And with that, through with the right partnerships, there can be resource augmentation, a strategy to modernize that legacy system that often is costing you time, but it's also the friction of why the fintech financial institutions were banking, because the banks don't have a lot of technology focus, infrastructure, resources. The integration was hard because they're dealing with ancient sometimes or very legacy systems. And the fintechs want to move fast and are like, okay, if we can't do that, boom, we're going to go direct. One of our customers, which is called Unicred, out of Brazil, open banking is in many countries. The US is actually on the later side of adopting. But Unicred is not a huge credit union, been around since the late 80s. But what they were able to do is to improve their payment initiation services. They were able to innovate by adding personal and business finance management to their portfolio because they could operate as a platform, and they were able to register over 10,000 members for those payment transactions that resulted in nearly $1 million on their platform. What does that mean? There's real value if we reduce the friction of integration, augment the resources for the smaller organizations, and give them a compliant platform that doesn't cost an arm and a leg or the 3 years marketing budget.
So let's talk about the pressures a little bit. I mean, I think we've talked about the competitive side, what that looks like, and obviously where that's coming from, both from much larger institutions that have much larger budgets that are kind of really shifting their focus to being more we build it here technology providers, and then also emerging fintechs, and again that's changing, and I think certainly in the credit union space where you're seeing QSOs going as kind of getting away from more traditional financial services and more into a technology base. That's certainly the case. On the regulatory side, the less carrot and more stick is CFPB's Rule 1033, which is still kind of in its draft mode. Is that the name for it was, I have it written here, personal financial data rights. And a lot of the quotes from the firm, and particularly the director Rohit Chopra, was about portability. It was about having access to the data, that as a consumer, your access to your data. There's always the story about fees in there because that's kind of like one of their main pillars. And then the third one was the ability to walk away from bad service. And a lot of the things that they talked about in how they pitched it and why it was doing was how static so many relationships with people have with their bank. Now that gets the hackles up from a community financial institution, because they don't see themselves as necessarily just another service provider that is bringing a commodity service. They as much transfer and are in the business of trust of anything else. And every time one of these, like, but yeah, I can go do business with, a company that is no more an app on my phone, you get into like all of the issues about where that runs awry, about, the deplorable customer service record a lot of, standalone fintech companies have, where you don't have the protections of a regulated industry. You certainly don't have the insurance that comes from FDIC and then NCUA that goes with it, and like loss of thing. And then you have like these widespread third-party failures and exposures. And the most recent one being Synapse. How many people got caught up with not having access to funds because a company they never heard of, they never had an agreement with, they weren't even aware they were relying on, effectively went out of business and restricted access to their fund. Now, a lot of that got resolved eventually, but somebody's relationship with their primary financial institution, whether they think of it that way or not, is, am I going to be able to make my rent payment on Friday? Right. And like that risk and that trust, like that's the thing. Like that is so much the thing in what this space is. And the idea of, let me put it another way, the negative here, where the fear and the objection comes from. I'm a financial institution. I do all the things I need to do to satisfy government requirements so that I can effectively have a license to do business. I am now being forced essentially to spend my precious resources and money, and attention and ability just to manage change to essentially make it easier for my customers to go somewhere else. And that does not sit well, right? And it makes a lot of the things. I mean, frankly, the CFPB is not the most popular regulatory agencies with banks anyway to begin with. That makes it even worse, and they see it as not only you're making my life and my time more difficult, but it's to the detriment of my customers, because they are being exposed to a broader ecosystem of financial partners that they assume operate under the same rules and um, guidelines and regulatory structure as banks, but do not, and are being exposed to risk that I am not. And so that's this kind of, it hurts my business, but it also hurts my customers aspect. So I just say the response to that. I know I said a lot there as a mouthful, but I'm trying to articulate, the sense of frustration and um, not necessarily a rational fear that this is pushing the industry in a way that is not
Mhm.
good for customers.
Mhm. You've got a lot there to unpack. I think what I would pull out as what I'm hearing is also what I'm hearing when I speak with executives. One, and I call it the fear of mass exodus, that open banking and making it more portable for me to move my accounts, my business will be detrimental to my business. So I want to come back to that. The second is the risks and security, and that portability, that data sharing, I think, is in the minds of banks and credit unions, and I would say of all size. I've talked with small and I've talked with some of the juggernauts, and I think that's a shared concern of the security. And I think the last piece of it is um, the control, and the control feeling like there's no control when I've built this trusted relationship, that I feel there is some control, right? You never have total control of customers, but a little bit more. So let me maybe hit on all three of those. The first, around a mass exodus, whether it be Brazil, Colombia, Australia, the UK, other places where this open banking regulation has been adopted before. Organizations have feared that, and it's not come to pass. An example of this, and someone we brought to the Global Open Banking Summit in Washington, where Director Chopra spoke in March, and that was hosted by the FDX, their head of open finance of Sicredi, Brazil's largest and oldest credit union, got up on stage and said that's exactly what they feared, was mass exodus. What they found is growth, and they actually, through open banking, expanded their deposits. They expanded their customer base. They expanded the amount of transactions that ended up being almost over 2 million in US dollars more of credit, and an increase in deposits and savings through the app, and ultimately added more value to that customer, and they grew their revenue. They did not see a mass exodus. Why? Because when I'm understanding the customer at a deeper level, I'm beyond screen scraping now, and I'm actually connecting the data, looking at the data and the trends. I can start to see that my customers might need something like a personal finance manager because they're struggling with XYZ. Or, oh, they're asking to move something to, let's say it's from a small bank to a larger bank. Well, is that because the digital experience is better? So they did not see a mass exodus. They actually grew their business and the member experience. But what they had to do was use the information, the insights, to keep adding value. It's not just a one and done thing, right? You've got to keep adding value. The second that we discussed earlier, in what you've heard as skepticism, I've heard it too, is security and risk. Open means riskier. It depends on the way you go. We've been working with analyst groups like Gartner. They've got a great paper out in May on the strategic use of APIs in banking as a service, and connectivity and security can be heightened with a simple API first strategy. And what a lot of, especially these smaller banks, they're relying on the data aggregators Those data aggregators have played an important role and also been the screen scraping solution that they needed. Is is to go beyond that and actually have the customer own the data by you owning the API, you owning the experience, the consent and authorization management, getting down into that. And that is something that doesn't have to be a multi-million-dollar project. These small banks and credit unions can't afford that. But what it should be is, yes, we're compliant, secure more than we were. And now I'm still driving the value, right? To talk to that exodus. And then the last part is I think it really comes down to rethinking the business, right? If you're a local community bank, if you're a smaller credit union, that trusted relationship is the key. You should be able to provide better service experience, right? That's why I go local. Um, but if you're not, then this open banking platform can actually give you that foundation to add capabilities, products, services. And I would challenge your listeners, what are the business growth opportunities you have in your bank, in your credit union, and what's in the way? And I guarantee you, integration is going to come up first. Secondly, is going to come up resources. And third is, I don't know what's going to happen in compliance. All three of those can be very addressable with a right partner, a business strategy that incorporates technology, but not technology only, and a, a absolute, and I think all your listeners have this, an absolute obsession with the member or banking customer experience. And with that, I predict no mass exodus, more secure, and more revenue streams based on what's important to that banking customer or member. And Rich, I know it sounds like motherhood and apple pie, but we've got, several case studies, Unicred, BMG Money here in the US doing open payroll, uh, Secregi, a division of Agon Bank, MAG Insurance, doing open insurance. It is so possible. But I think your listeners are at an inflection point. And that inflection point is, do we look at this as strategic or do we look at it as tactical and compliant? And I think in between there's a lot of gray.
So two things to follow up on that. One is particularly around examples that are coming from Central and South America is people would say that's not a fair comparison because you have such different rates of informal economy, unbanked people. I know one of the big studies that came out of this was from the work that went into FedNow, right? The real time payment via the Fed rails, and I know ACH has their own real time transfer,
Yeah.
but that aspect of the uptake rates were so much higher, and it really had to do with the unaddressed opportunity that there was. That was so much bigger, and there were such large incentives and penalties as well that the government was putting to bring more of that into the kind of formal banked economy, right? So that I will say that's probably one bit of pushback that you would get on that point. And I know you have other examples, but that's one. The other piece that you made about the upside and seeing this as a way to increase your service level, to increase that trust. I think that's absolutely there. Most of what, and particularly in the context of 1033 and these coming rules, most of what you hear pitched as the upside is things around like DAO. It's going to be onboarding is going to be that much easier. You're going to be able to do things like originate loans and look at maybe more non-traditional sources to do loan underwriting and risk assessment and things like that, and that clearly there's a benefit to that, although that is a two-edged sword because it also gives your competitors the same opportunity to kind of pull that data from there. But I think your point about embracing this as understanding your customers' behavior from a data standpoint, from their digital experience, and seeing that as another way to get feedback and understand them is a whole nother way to kind of superpower the personalized service, that customer intimacy that community financial institutions just by their nature rely on and have, but having that as an additional angle. However, it requires a different set of skills, um, both from a technology standpoint and from uh, just the ability of being really truly data driven in what you do. Um, I want to address that, but I also wanted to bring just one more point in there to ask you about it. It says, as we've been talking about 1033 as kind of being this push, the CFPB, still not finalized rules. I believe right now it's still there's going to be the industry driven guiding committee that's going to provide like the actual technical requirements. They're still figuring that out. That may or may not be figured out by the end of the rule. How would you address somebody who says, look, too much uncertainty, plus nobody's forcing me to do this now, I can kick this can down the road for months, maybe years. This might not even be a 2025 consideration for me. How do you talk to them as far as at least what they're planning and how they're thinking about it?
And we're having many of those conversations right now. The first is really one, what's the business strategy for growth? And this is what we like to talk about first, right? This is why we've partnered with many banks and credit unions to do what they've done, because it comes back to the business value. So, how are your members or banking customers today with your services? What are the gaps? What are you working to fill? And then what are the roadblocks? And it's in those roadblocks that legacy applications, integrations, complexity are going to come in. So then what's the strategy to deal with that? And oh, by the way, insurance yourself on open banking. And why do I say, oh, insurance yourself? You could sit and wait and you can keep going as you're going. And the question is, are your banking customers so happy with you that regardless of the challenges they might encounter with your digital products and services, the breadth of your products and services, that there's no retention risk, right? If that's the case, then I'd say status quo. My gut is, and I've talked with enough folks on all sides of the revenue stream, there is a real fraction in the experience of digital products and services and being able to do what I want when I want. And can I get my car loan from my regional bank at the car dealership? No, not today, right? They have their own partners. So how can I now expand those and make it easier for my customers to get the loans they need to, yes, move and establish an account. I just did this with my grandson. Financial literacy is important. Um, Bringing up an app. But for me to connect that app to my bank isn't there yet. And I want that. I want to be able to gift him, his birthday's today, money and a small toy, not just all toys, for his financial education and to have him learn. So I look at that and say, well, it should be easier for me. So I really want to encourage everyone, look at your business strategy, look at the growth, where are the holes. If it's integration, attack that legacy modernization with an API first strategy that puts you into a compliant posture now, not wait on the CFPB. And I believe they will find better insights, the products and services, and may attract even more customers because this bank provides an experience that you can't get from the big guys, right? And so that's what I would say. I do want to, before we wrap up, come back to the international pushback, and that it's not necessarily relevant. Yes, all financial institutions deal with different regulations and requirements in every country. That's true. But when you've worked in the UK, in Colombia, in Brazil, in Mexico, and in North America, I believe there is a broader view of strategy, of capability, and of scale. Um, and why do I say that? Because every financial customer wants security. Every bank wants security. The fundamentals are the same. How we get there is different. And the fact that Brazil and PIX and instant payments is something supported by every bank isn't the same here. But the way you drive consent and authorization, the way you store data to your locality, that is very, very transferable, albeit to meet different requirements. So just a little bit of a pushback on that.
Well, Lisa, this has been great. Lots of great insights and advice here. If people want to learn a little bit more about your perspective on open banking or anything else that you have, where can they go to get more information?
We've set up a page for open banking. I think you'll see the URL here. None of these are salesy materials. They're all meant to help you on that strategy, on that planning, and to get ahead of the cart instead of pulled behind it. So please reference this URL. You'll find a primer for open banking basics, a lot of blogs geared at open banking and credit unions, as well as a lot of other webinars and resources. And I would just say, Rich, I have really enjoyed our conversation. Your command of this industry is amazing. And I appreciate being able to talk and hopefully inspire some thoughts from your listeners on how they approach this pending CFPB regulation. Thank you so very much.
And we'll put links to all of that in the show notes. Lisa, thanks again for being here.